Friends, as you are aware that whenever economic budget is coming, then everywhere there is a, uh, m- uh, flood of programs on union budget, and majority program, mean 95% program, covers about the tax aspects, and the budget is synonyms with the taxation related things. But we thought that this time we should not talk about the tax aspect, because everyone has discussed or discussing. Let's discuss about the economic aspects of union budget. Now, you have seen that on 1st February, Union Budget 2025 where came and Finance Minister Nirmala Sitharaman has presented, and they mentioned that it's a blueprint for economic growth of Indian trajectory. They mentioned that setting the tone for investment, growth, and social welfare in the coming years. And they were focusing at Aspirational Viksit Bharat. This budget aim for invigorate the new key sectors such as agriculture, MSME, manufacturing, infrastructure, digital transformation, and financial reforms, and understanding its economic impact, which is very crucial for any economic development. Then they mentioned that it's for business, investor, policymaker, and professional navigating India's evolving financial and regulatory landscape. Now, friends, as you are aware that this budget, which is people think, but market is not giving that reaction which everybody was expecting. So today we have Arun Malhotra with us, who is a expert in market. We will ask him that why market is not giving that reaction, what are their expectation, why this expectation is less. Then we will discuss the comprehensive analysis of economic aspects of Union Budget 2025, including sector-wise allocation, fiscal measures, investment opportunity, and structural reforms. And in this webinar, we will discuss on macroeconomics overview, agriculture and rural economy, MSME and startup, because that is a one sector where government is more focusing, and rightly so, because MSME is providing the maximum number of GST input as well as the employment to Indian and startup is a new thing, which is another aspects of, in place of job seeker, you become job provider. So that is also fulfilling that concept. Then infrastructure and urban development, that is another aspect which is there in this budget. Manufacturing, they want to focus and they want to give more emphasis on export. Then digital and financial sector reforms they are doing, and they are saying their investment landscape and private sector participation, all these things, it is a part of the budget, and what Finance Minister has said that there will impact. So we want to understand how this will be impacting Indian economy. So for that, we have requested two learned speaker, which is first I welcome Dr. R.K. Agrawal. He's a partner, Rakesh Raj, an associate chartered accountant. He is a chartered accountant, company secretary, cost accountant, in addition to MCOM, MBA, LLB, LLM, and PhD. He is one of the most qualified professional in India. He has more than 35 years of standing and practicing as a chartered accountant, and he has been a member of Accounting Standard Board of ICAI. He was chairman of Northern India Regional Council of Company Secretaries in 2003, and he was also elected as a president of Faridabad Income Tax Bar Association 2002. So I welcome Mr. R.K. Agrawal. He's just joining. And then our second speaker is Mr. Arun Malhotra. He's a founder and managing partner of CapGrow Capital Advisor Private LLP, which is a PMS portfolio management services they provide to the client. And they have a more than 500 crore corpus with them, so managing various clients' money and investing. So he is one of the right person to tell us that how this budget will impact, because impact of budget will come in the economy later, market react first. So we will understand from him. He is an investment professional and has an experience of more than 30 years in portfolio management, equity research, and trading. He has extensive investment knowledge across the entire capital market, capital structure, including the direct equities, convertible bonds, high yield distressed debts, and structured transaction. And Arun has worked in national and international firm, and today he is running his own company, CapGrow Capital, a SEBI registered portfolio management company. I welcome Arun Malhotra for this program, and your knowledge on the stock market, capital market, and most important thing is Arun is very, very deep into research. Whatever they are investing after doing thorough research, and it will definitely helpful to understand from him the market dynamics. So welcome Arun, and I welcome Manoj Kumar. He's a partner and head M&A and investment banking corporate professional, and Manoj looks after investment banking and IPO market of main board in the SME, and he do restructure and amalgamation work also. So we will understand, Manoj, that what is the economic aspect. The finance minister has said that she wants the merger, which is without going to the NCLT, you can do a small company merger and merger related to the subsidiary and holding company. That will be, they are reducing more time, and they want to facilitate more. That will be there. And Mr. R.K. Agrawal has also come. So I welcome Arun, R.K. Agrawal and Manoj for this program, and we will discuss. Before handing over to Manoj first to tell about what are the development, my take on this particular budget is, I think, 4. And that is also, and the entire budget is moving around the 2 aspects. One is Aspirational Viksit Bharat, which should be self-sufficient and which should be developed. So when we are becoming a 5th largest economy, then our target should go to 4th and 3rd. But the most important thing, economic development is one aspect, and inclusive growth is secondary aspects. Suppose you have created a position in the world, but your people are still poor. You have less job. You have more problems related to various aspects. So you have to have this particular thing, that you have to do the balancing. So for that, this time the budget has divided into 4 parts. They are focusing on agriculture, micro, small, and medium enterprises, and investment and export. This is their main target, and they want to focus it because they want to stimulating the economic growth by capital expenditure, incentive for key industries, so economic activities and job creation can take place. Then simultaneously, they want to do enhancing the social welfare by credit access to farmer and other people in this dairy farmer, and supporting MSME. So budget promotes the inclusive growth, which I was just mentioning. And MSME is an integral part of India, and everybody should understand, without the growth of MSME, things will not and change. And MSME growth by providing this, and the SME stock market, which is also creating another route for capital formation for these companies. And more than 1,000 companies are listed on SME, which is creating wonders. I'm not talking about some of the black sheep, but majority companies are doing, and this is one which we will discuss when I will come on the topic with Arun about the SME exchange relating to this. SME growth. Then promoting the sustainable development, that is another aspect, that you should not only grow in numbers, you should see that your growth is reaching to the last miles of the people. That is most important. So that's why they want to improve living standard of the people, and they want to do sustainable development. Now, if you just see few aspects, one is the most important thing, which normally people are not focusing, and I will discuss with Arun and Manoj and RK also. Fiscal deficit. This is one aspect which is controlling the our megai or other things which we talk. They are talking about they want to fix it 4.4 of GDP, and which was earlier 4.8. Then they want to provide capital expenditure, or total expenditure of government is 50.65 lakh crore, which is higher than 7.4% as the last compared to the last year. Then they are planning to provide various facility to the agriculturists, and they are not providing this, but they are targeting top 100 districts where low agriculture product is there. So that's why they want to promote not only this part, that is one of the inclusive growth part. And then they are planning to give 3 lakh rupees Kisan credit card to 5 lakh rupees, and it will benefit to 7.7 crore farmers, fishermen and dairy farmers. That is Kisan credit card scheme which is there. And then another aspect which is also connected with the agriculture, that mission focusing pulses. So tuar, urad, masoor, all these pulses are majority you have to import. So now if you are making this, it will be useful. Then in MSME and startup, they are focusing more. They are talking about that how they can create better MSME sector, efficient MSME sector with no problem with their fund. That's why they are focusing on credit guarantee scheme, and they want to provide first-timer enterprises more money, more credit things. And in this also, they are focusing not only this, but they are providing the more things to the scheduled caste, scheduled tribe, and women will provide term loan more the amount what they are providing now. Then infrastructure and urban development, they are also planning out of this 50.65 lakh crore, 11.21 lakh crore they want to invest in focusing on urban infrastructure, and they want to create a growth in this. And that include housing, transportation, smart city, and urban living standard. They want to do it. Manufacturing, Make in India, they want to give more things like China plus policy, electronics and EV is one of the most important thing, and export promotion they want to do, and especially fishery production, they want to boost export by this. Then digital and financial reforms they are planning, and the most important thing they have done, the gig worker, which is like Swiggy, Zomato, Blinkit, all these people, they are not appointing people, they are taking the help of gig workers. So for them, more than 1 crore gig workers, they are providing the social welfare scheme, their medical and other things in this. Then private sector participation they want to do. That's why they are creating more on research and development, and simultaneously they are focusing on ease of doing business. That's why so many laws which is putting penalty, criminalization, they want to remove. So all these things, this is happening. So what I have done, I have tried to take you these aspects, and then capital market, because all these things which is there, capital market will have to react. So now focusing on this part, we have RK Agrawal, who is a tax expert, but I have requested him that you have a knowledge of tax, but your today's focus should be on the economic development through the tax point of view, because unless you are not collecting good tax, you cannot invest money. So the corporate tax and the tax relating to personal, which they have given exempted, what will be the impact of this for economic growth? All these things will come. Arun, I will I have already told him that we want to understand the market dynamics, market understanding, why market is not reacted, and what are the issues, where the shortfall is there. So all these things will come. But before this, I will request Manoj to just give a overview of this, and then I will request Arun and RK Agarwal ji to discuss this part. Before this, I just want to announce the government is planning to lay the direct tax code on Monday in the parliament. So the direct code will replace the Income Tax Act 1961, and this will come the new direct tax code, which will change because since it has come, thousands of amendments has taken place every year in the budget. Every chartered accountant, every tax professional is reading that what is new, what is between the line, and when you read this, you will interpret in different way. So we will discuss this issue about entire new direct tax code if they lay on the parliament on this Friday. If it is not, then we will discuss some other topic that we will announce. Otherwise, on next Friday, we will have direct tax code on 14th February. That is also interestingly Valentine Day. So the government is giving some gift to the country as a Valentine gift or something surprise will be there. So we will discuss this. So over to you, Manoj, for your quick reference of this budget on economic aspects.
Thank you very much, sir. I think you have elaborately covered all the proposals which are there in the budget. I think in most of the debates across digital platforms, etc., the focus is only on the income tax rates slashed by the government. But that is not the only thing which is there in the budget. I think this time the budget is quite balanced and with the fiscal prudence to keep the deficit at a very low level of 4.4%, and that would help in longer run. So the focus includes economic resilience, boosting of investment, inclusive development of various aspects. Then there are certain tax reform. Obviously, the new direct tax code would come, which will change which might change a lot of structural things and make those things easier for interpretation of the people who are using it. But it will also, there are also other provisions like they have reduced the total tax slabs under custom rate. They are also looking to revamp the GST law. So those things would also help in ease of doing business. So I think broadly, as you have rightly said, that the targeted fiscal deficit is 4.4% of the GDP, which is for current year revised estimate is around 4.8%. So this will be quite a drastic change. However, if we go deep, we believe that this is being achieved through reduction in the expenditure. So that may be a dampener for the market and economy, because if the capital expenditure is getting reduced, then it will not growing in the same manner as the economy is growing. Then in longer run, it may not be as positive as the thing is. So that is the only thing I believe which might be impacting the business. So there has been various policy announcements which are very, very important. Like for ease of doing business, they are appointing a high-level regulatory reform committee for all non-financial regulations to be reviewed and to made simpler. Maybe certain laws would be made redundant, certain laws will be removed. So that is one of the key development, and I think 1 year time has been given to the committee to provide submit their recommendations relating to the same. Then the other one is the MSME related support. So government is doing total change in the structure, substantially increasing the investment size and the turnover limits for all MSME sector. So now the turnover limits are increased by 2x. And also the investment limit is also increasing by 2.5x for all micro, small and medium-sized enterprises. This will help to cover a larger number of entities in this fold, MSME fold, and they can take all the advantages of MSMEs as provider of different government policies, including they are also would be able to recover the debts easier manner, as all the big corporates are required to disclose the amount due to MSMEs. Similarly, the IBC law is there, which also gives certain benefits to the MSME, that the promoters can also participate in their revival. So that benefit would also get extended to many of the entities. Also, the government is also extending the credit guarantee scheme relating to MSME. So they will that limit has also been enhanced to double, and this would certainly help in the growth of MSME sector, and it is very good. Similarly, they have also focused on the startup, and they have extended date of incorporation of startups up to 1st April 2030. So it is a very big jump. Up to 5-year extension has been given for registration of startups, and they have also provided that the government credit guarantee cover would be doubled to up to 20 crores for sectors which are under focus. So around 26 sectors would be defined by the government, for which credit guarantee up to 20 crores shall be given to all the startups. So this is very good initiative. Similarly, they are enhancing the FDI limit in insurance sector up to 100%, with the condition that they will invest all the money in India. Then they are also providing. They have also proposed that the proposal for approval of mergers, all kind of merger demerger schemes, to be on fast track basis or a speedy basis. Also, I believe they are also enhancing the limit for fast track mergers to be for the companies which are right now covered for fast track merger, like holding and wholly owned subsidiary, or companies which are basically small companies. So now they are covering because the MSME definition has changed, they will also enhance the definition of small companies, so that larger number of companies are getting covered under that provision, so that the process of merger amalgamation, which is very important for economic growth and consolidation of which businesses, would be easier. Then they have obviously, as you have discussed, they have focused on agriculture as first important pillar of the economy, and so they are saying that 100 agri industry would be, and agri district would be selected, and for their productivity boosting, various steps would be taken. Similarly, 6-year plan for pulses mission is proposed for tur, urad, and masoor dal. Cotton is one of the most important product of cash crop for India. However, and it is, I think, contributing around 23-24% of the total world production of cotton, whereas the productivity of cotton is very low in India. So they are now focusing for the enhancement of the productivity of cotton, and which is a very good thing. Similarly, the Makhana board is proposed to be formulated in Bihar, which is one of the superfood, and these days in very much in demand. But their price is very much varying, and their production is also not up to the mark. So it would help in the growth of the backward area of Bihar. So besides that, I think under the income tax law, we have seen though RK sir would discuss in detail, but there has been various changes. So one is the presumptive tax for non-resident has been prescribed, which will be around 25% of the gross receipt, and it is a good move. Similarly, the tonnage tax provision, which is right now available only for international shipping, is now being extended to inland shipping, and of government policy in the last budget also focused on inland shipping, which will be a very cheaper way of transportation of goods across the country. So this provision would help in many company to enter into this line of business, and would help in growth. Then they have provided for filing of updated income tax return, which is right now of 3 years. Now it can be done up to 5 years, subject to certain penalty provision, which is provided. One change in the M&A transactions has been the carry forward losses provision is right now saying that in case there is a merger of loss-making entity into profit-making entity, the carry forward losses of business losses would restart from the date of amalgamation for next 8 years, which is like a greening of losses, and many of the corporate have taken benefit of the same. Now they are restricting this period of 8 years from the date of the year of loss, not from the date of amalgamation. So this might impact certain companies' business plan, but in a way, it is a good move to make the things clear. And I think that would be a good, the unavoided, the basically taking advantage of the loophole in the law should not be allowed, and that is the intent of changing this. Then they have made certain other changes relating to various sectors, like they are focusing on energy sector, and they have focused on the green energy. So tax incentive would be given to hydrogen, EV, and battery storage solutions. They have allocated around 20,000 crores for renewable energy. They are also focusing on new nuclear energy mission to search for small modular reactors, and that is a good thing because big size reactors, nuclear reactor is quite cumbersome and difficult for investment, private investments, but SMRs would be a very good move. Then with respect to the manufacturing, which is very important for the growth of the economy, so they are now formulating a national manufacturing mission, and it will help obviously in the growth of the manufacturing sector, which is they are also focusing on certain sectors which are giving a lot of employment, like footwear sectors, leather sector, etc., and want to create design capacity and component manufacture in the country so that the export can be boosted. They have also the budget have also focused on certain banking and financial reforms, like they are now saying that there will be deep tech and AI startups, and blockchain-based financial reporting systems would be introduced. Then IFSC tax holiday would be extended up to March 2030, which is also a very good thing because IFSC gift city is now started growing, and many of the people are forming business there for the financial sector. So it will help to boost this initiative further. I think broadly these things are there. Then they have also focused on health and education, which is very important. Then the sectors like automobile, EV subsidies extended up to 2028. Then they are focusing on real estate, affordable housing. So considering all these things, I think it is a balanced budget, and it is a growth oriented budget. Specifically, as we have discussed, the impact of increase in the slabs of in personal income would put a lot of money in the hand of medium middle income families, and which will boost the consumption of FMCG, electronics goods, etc., automobiles, etc. So I think in the longer run, these measures would certainly help in the growth of the market and the manufacturing sector. I think broadly it is a good thing. I don't know why market is not reacting as per the intent of the government, but anyway, I think Arun Malhotra sir will give more discussion on that, focus on that. But broadly, it is a balanced budget, and I think it would help in longer run. Thank you.
Thank you, Manoj. Thank you very much for giving the brief. Now, you have lastly told that why, if it is a good budget, and I have also seen inclusive growth and other thing, then why market is not giving reaction. So over to you, Arun. You have to tell us first. Start with this because your entire discussion will be on this. That why market is not reacting. So what is the reason? Where the shortfall, or the reaction will come after the implementation, or a market was expecting something great and it has not come. So we have to just understand and what is your take total call on the overall growth. Sometime what is happening, we have to set aside the market. We have to just see that if something good is there, then economic development will take place. Which you, because I have seen you, you see future vision, and vision mean sometime vision is simple thing which you other people cannot see, you can see. So over to you, Arun. Please tell us.
Great, great. Thank you, Pawanji, and thank you everybody, first of all, for joining this. It is my pleasure and honor to be on this panel. As I have been asked, I think the immediate response, one single word is the budget is very positive. Let me start with this. I think a lot of details have been provided by Pawanji, Manojji, but let me spend 2 minutes on what has the budget done. Why am I positive? I will come to the markets in my second frame. I think the measures which have been taken in the budget are an extension of the past reforms. So it has given that sense of continuity and systematically moving towards a Viksit Bharat. I know it's a very term which is being used very frequently. What it means is the inclusive growth across all sectors. It has the budget, the recent budget especially, I am very impressed with this budget because it has done a very good balancing act and laid out the foundation, so to say, the building blocks for the future next 5-10 years growth. If we have to see the budget, if we have to see from different dimensions, the budget has touched upon and tried to address all the sectors. Whether you take agriculture, you take exports, you take SME, you take investments, you take urban development, mining, financial services, maritime, power, innovation. It has done something or the other across for all sectors. And what about the stakeholders? We are the stakeholders. What has the government done for the stakeholders? Again, it has touched upon all the stakeholders, whether it is poor and middle class, which form the majority of the Indian population, women, MNCs, even the foreign investors, states. It has given more money to the states for infrastructure development. Startups, it has come out with a new fund. For the farmer is always for the youth. So if we have to see this inclusive growth will actually expand across all these sectors. And what will it lead to? It will lead to inclusive growth. It will lead to employment, development. It will also lead to securing our energy supplies. If you, as Manojji mentioned, about the PV, about the EV, what is the intent? It is trying to secure our energy supplies because India has always been energy deficient. So if you go into each and everything, why has the SME fund been being set up? See, if the government is not coming forward to put money behind this innovative startups, who will be behind? Private capital is very riskier and very selective. Who will have that, deep sea kind of innovative companies? So it has touched upon across all. Manufacturing has always been there, make in India, rural prosperity. So overall, the budget has done a marvelous job of boosting consumption and continuation of the investments on the capital expenditure side. Through tax cuts, will not delve much more, but which are closer to 0.3% of GDP. But I want to add something here. This 1 lakh crore of more money in the pocket of the people, what will it lead to? Just take a 4x leverage. 5 lakh crore they can spend. A lot of people, when you buy a house, 20-30% is your cash down payment, 70% is loan. So it will also lead to those kind of investments or savings. Increasing capex. A lot of people are saying capex has not been increased. But do not forget that the capex of the government has increased by more than 15% CAGR in the last 4 years. So 11 lakh crore of capex, the government has still not consumed what it was envisaged last year. And then fiscal consolidation, we all thought, they are going to lose tax cuts, they are going to probably increase capex. So probably there will be some slippage on the fiscal part. So fiscal consolidation at 4.4% of GDP is phenomenal. And I'm telling you, the foreign investors love this kind of fiscal discipline. How much they are able to achieve? I think by having that inclusive growth, they will definitely have much more income, both through direct and indirect taxes, to make sure that fiscal consolidation number they are able to adhere to. And lastly, the macro stability. What does investor want? Stability. Everybody was saying capital market tax, capital gains tax, short term will get, long term will 12.5 to 15 ho jayega. What have they shown? They have shown that every year we are not going to tweak this number. So what does it give to the investor? It gives longevity, that I can rely. If I'm investing today, I know these numbers are not going to change for 3, 4, 5 years. And that will actually be strengthened by the new tax code which will come. So this continuity in policy, whatever may be the number, it gives a lot of visibility to the investor in terms of in terms of investing in India. And all corporates are also clear, all investor stakeholders are also clear what is there in the budget, where government investment is available. And all this will lead to, all these structural reforms will lead to accelerating the growth of Indian economy. Whether this growth is going to come in the 1 month, the answer is no. Is there a big bang reform? The answer is no. And that's why markets have probably been very subdued to say. Market looks for big bang reforms. There's no big bang reform here. But structurally, as you go deeper inside all the budget measures, you will see there is a long-term thinking. We are now strengthening our path on the global map and making sure that India actually is on a growth track for not 1 year, 2 years, for umpteen numbers of years in the time to come by. So I will stop here. I know the market, as I said, market is always short-term phenomena. They look for big bang reforms, which are not there. But structurally, if you ask me, this could be the inflection point or the turning point for the Indian economic growth path.
Thank you, Arun. Thank you very much for explaining. So the crux of your answer of my question, that why market does not reacted. Market is saying dil mange more. So, and when we are saying what is the meaning of dil mange more? So I will say my dil will always mange 2x, 3x, 4x. So that is one part which is there, and that's why market is not reacting the way. And I have seen also that this type of long-term growth, sometimes people think that inclusive growth always not favored by market. If you do the social welfare, if you do all these things, so they think that you will take money from us and you will invest there. But sometimes everybody should understand, if my neighbor is not happy, then my growth will also not be that I can't enjoy that growth, because always another one person is hungry and you are throwing foods. So that somebody should also realize. I will come to some structural issues which you have raised. First, we should listen to our expert speaker R.K. Agrawal ji, and I will tell you, R.K. Agrawal ji, I think he has given majority lectures on tax when budget is there. But I requested him today that this topic is totally different, and he is giving at various places relating to economic aspects, and his knowledge on this concept is very good. His investment knowledge is also very good. Market as a investor point of view is also very high. So we should understand from him the implication and this. Over to you, RK.
Thank you, Pawan. Thank you, everybody. Just a minute.
So I was just telling everyone about the RK Agarwalji. He is also a tax expert and advise people for various things for their long-term strategical growth. Over to you, RK.
Yes. So let me start from where the other speakers have left. Why the stock market has not given thumbs up to the union budget? I feel that in stock market we always cherish and we always wish that market keeps on going high and high, because if market is going high, then wealth is created for everybody. So when market touched the index level Nifty of around 26,300, it was overvaluation. Because what we have to see, if something has gone up, it will come down unless it is not unreasonably high. So I feel that the I can say 4 reasons why the market has not reacted so positively as we could expect or we aspire. That one, number one, it was already overvalued. It is still, I think, is at these levels also, it is overvalued by maybe 5-6%, because P is still around 20 of the index, which should not be more than 18, probably, to be fair, to be reasonable. And there was overvaluation of rupee also. With the change of the governor in RBI, the rupee, which was artificially or which was being held up by the RBI, the depreciation of rupee, that we are seeing is now falling. So that is one reason. Secondly, the global uncertainty of the policies due to Trump having come in US primarily. That is another reason that we are not able to decide that to which direction we are moving internationally, globally, and how the policies of the US government will benefit or will harm the developing nations, or particularly our country. Another thing is that we are seeing a decline in GDP. The GDP, which was budgeted to be 6.8% in this financial year, has actually been up to 6.4 only. So there has this decline. That is another reason. And the fourth one is that earnings of third quarter of the corporates are not as promising, as robust as it could be, or as it were, as the earnings were in the first half of the financial year. So maybe and this is because market, when it goes too much high, it has to come down. And budget, if there was something very positive for the market to cherish, market would have again gone up. But budget is almost neutral from that point of view, neither something very negative nor something very positive, and that's why the market are also neutral from that point of view. The budget reaction, is hardly anything. It is almost at the same level. So this is my take so far as why the market has not gone up or has not given a thumbs up to the budget. But coming back to the economic aspects, and then I will take some tax aspects as well. So far as the union budget exercise is concerned, this is the exercise where the fiscal policy of the government are announced. The balancing of the expenditure and income of the central government is laid down. As Pawan said, the total budget layout of the expenditure is around 50.6 lakh crore rupees, out of which 4.4% is deficit, around 15 lakh crore rupees, and the balance amount is around 35 lakh crore, which comes from collection of taxes and certain other incomes. 90% of the government revenue out of this amount of 35 lakh crores approximately. 90% of the government revenue comes from the collection of the taxes. Our economy is a tax-based economy, not the asset-based economy. We are not having the huge assets like the Middle East countries or Russia or some other countries are having. We create the revenue for the government out of the taxes. Now, the point which is to be pondered upon, that everybody has said, and I do endorse and agree, that there is stability, there is consistency in the policies of the government, and for that matter, it is not required that in every year's budget some hi-fi announcements or some changes or some new things should be announced. Continuity and following the policy path which has already been laid down is what is required, and that is what the stability and consistency government is following in its policies. And all around the development path which has been laid down, it is being followed. But a point of concern, because I would like to address this issue, that a point of concern is that the GDP which we planned 6.8% growth, while in the earlier year it was 7.2%. Why it has come down to 6.4%? Because if we have set our target of making the India a developed nation by 2047, that means that presently our GDP is around $4 trillion. And if we want to reach there, it should be in the bracket of 35 to 40 trillion dollar. That means that we need to grow the economy almost 9 times, 10 times from here. And 9-10 times from here would require that our growth rate should be around 12%. In 6 years, we are doubling the economy. Then we can reach to that target. And if we want to achieve around 12%, it means that real growth should not be less than 8%. So real growth should be between the bracket of 8% to 9%. Adding to that inflation comes the nominal growth and the adjustment for the dollar or the rupee depreciation. Then we can achieve around 12%. Only when our real growth is 8 to 9%. Against that, if we are achieving 6.4%, then probably we may not be able to achieve the target of 2047 of reaching up beyond $35 trillion. Therefore, the point of concern is how we can achieve that. How this is possible. I think that the crux lies that we have to attract the investment. The development of the economy requires investment. When there would be investment, our investment can be from three sides, from three angles. One is public investment by the government. Second is private investment by the industries or entrepreneurs, private investment. And third is FDI, foreign direct investment. Now, first of all, so far as the public investment is concerned, government is doing its best. Because there's out of the total amount of 50.6 lakh crore which government spends, what is the capex? That is the productive asset. Other are the commitments which are required to be met by the government for revenue expenditure, for the establishment expenses, for the security, the external security or defense expenditure, or for the interest cost, all those. But capex is around 11 lakh crore which they have laid down. That is going to be invested in the infrastructure, and that gives the cascading effect to the economy as a whole for further development of the economy or the industries in turn. So there is a lot of buzz going on that the government's capex is not as much as it should be or it should have been. First of all, Arunji said very rightly that CAGR of capex of last 4 years is around 15%. Last year, government set a very ambitious target. Increased the capex around 20% last year from the earlier year, and they kept the target of around 11 lakh crore rupees. But they could actually spend only 10.2 or 10.1 lakh crore rupees. So there was a shortfall. So far as the actual spending was concerned, in comparison to that, we have kept 10% higher target, which is reasonably okay. But so far as the budgeted target of last year was there, we are almost equal to that. So I think there is nothing wrong in that. And if government is able to achieve this target, that's good enough. And government is primarily spending in the development of infrastructure, which is the pious responsibility and the most important job of the government, because the infrastructure has to be created by the government, and all kind of infrastructure is being created by the government. In any sector you see, it may be power, it may be energy, it may be telecom, it may be road, it may be port, it may be airport, whatsoever, it may be digital, etc. Government is doing it best so far as the development is there. One thing which I think is missing, which is in the agenda of the government, but they are not able to concentrate, or they are not able to put more focus on that, is river linking project, which can give a lot of boost to the rural economy as well. But the point which I was making, that public investment, the layout for public investment, which government can be able to invest or to develop the infrastructure for the purpose of the capex, is again the cascading effect, because the revenue of the government is coming from the taxes, and taxes would be collected only when industry grows, because the taxes are primarily collected from industry and services. And for that, private investment, private entrepreneurship is required. That has to be taken care of. That has to come forward. In the economic survey, this concern has been raised. In the budget also, finance minister said that private investment is not coming up as much as we do expect. Now the whole point is that there is lack of entrepreneurship. There is lack of private investment flowing into the economy. That is the concern point for the government, and why the GDP is not growing at the pace of 8% and higher. We have to address this issue, how this has to be done. Now just think, private investment, or for that matter, FDI also. For both of these to be attractive and people to come forward for making the investment and capex in these areas, there has to be business friendly environment, because some private person will come, either the FDI is coming only when they see the opportunity. Here there is a possibility of demand, which can be of consumption, which the huge population, growing population, young population can fulfill, can create. But for that, this is what is required, that there should be business friendly environment. Why somebody will put money? Because if some person, some businessman is making the investment, they are taking the risk, and when they will take the risk, they will see whether there are good opportunities of making the profits, whether they are secured, and whether whatever the investment is made or the business is done, they are respected for that. There is a business friendly environment. It is not that for some certain non-compliances they are hauled up, for certain violations which are of small nature, they are punished, or they are dragged. So I think the crux of the whole thing boils down to a point that if we want to grow GDP at a better pace, we need a business friendly environment to be created, and or we can say that ease of doing business to be created. And government is very much conscious of this, and this is a continuing process. Creating ease of doing business or creating business friendly environment is a work in progress. Government from last 10 years, in every year, in every step, they are trying how to make the life easy for the businessman. In that process, I will certainly add one thing, that there is some mismatch or some gap between the vision and thinking of the government, and when it is bureaucratically implemented by the executives, there is some where there is a mismatch. And in democracy, we have to bear with this. We have to see that it may happen. Government makes the policies with certain vision, but when these are implemented, due to certain vested interest or due to certain lack of understanding of the proper thinking of the government vision, maybe that the things are not implemented in the manner in which the policymakers do want it to be. But nonetheless, this is a work in progress. Government has been doing it, but still something more is required to be done in this direction. And that's why a high powered committee for creating ease of business doing has been created, has been set up, is going to be set up as announced by the finance minister in this budget. Trust has to be created between the industry and the government. Then in this direction was more one thing which comes is regarding the simplification and rationalization of laws. As I said, that 90% of the government revenue is coming from direct and indirect taxes. These are the primary laws from where you are getting the revenue. So therefore, government is continually making the attempt in that direction, that how to simplify and how to rationalize these laws. Indirect taxes, there is a separate council now, the GST council, and they are quarterly, they are meeting, they are taking the decisions. In this budget also, they have announced that government want that the slab rates should be reduced from 4 to 3. At least the middle slab rates of 12% and 18% should be clubbed together somewhere in between, and that should be done. For that, 3 years back, they set up the group of ministers, but they have not been able to achieve to a consensus rate where there is not much loss of revenue to the government. At the same time, the increase of the 12% slab is acceptable to the stakeholders. So it has not been so far possible, but they have again expressed their desire that within this financial year they will try that these rates are calibrized and these rates are at least one slab is reduced. For direct taxes, every year they are making the changes as per the vision which is going on. And last year the amendment in the capital gains tax was very commendable thing. Reduction of rate from 20% to 12.5%, and so far as the listed securities from 10% to 12.5%, so as to simplify at one rate. And secondly, it will go a long way in curbing the black money which is created in real estate transactions. In course of time, we will see that now the seller, when wants that the whole of the amount should be taken in through the banking transaction, not in cash, because the rate of tax is 12.5 only, and after adding surcharge, etc., it may be around 15%. But everybody is happy in paying 15% if the amount is not transacted in cash. Everybody is happy. But the problem is from the buyer side, because buyers are not mentally that much prepared, and maybe in course of time, gradually, I feel within next 4-5 years, this mindset will change, and people would be happy to, the gap of the actual market rate and the circle rate which is existing, and the transactions which are done of the real estate, where a lot of cash transactions are involved, it will get reduced considerably in course of time, unless I am giving the rider, which Arunji also said, unless the government increases this rate of 12.5% higher, it should not be done. This is a very good provision which was made last year, and it should be continued. Decriminalization of lot of laws. Again, they have announced in the budget 100 more provisions they are going to decriminalize. Every year they are doing it. Again, this is a very good attempt. Direct tax, for direct taxes, new code itself is now coming. Let us see, next week only, Monday, Pawan said, on Monday only, the new direct tax code is being tabled in the parliament. So let us see that what are the changes which are brought. And Finance Secretary has yesterday said that we are not going to make much conceptual changes or tinkering in the existing provisions. The only thing which we are going to do is simplify the language so that the interpretation becomes easy for the users of the of this law. So maybe let us see. But 3-4 areas which I am keeping an eye, where the provisions are quite complicated, like for trust and societies, like TDS and TCS provisions, some of which have been corrected in this budget also. Maybe for partnership firms and LLPs. So there are certain areas where provisions are quite complex, and we require that those provisions should also be rationalized, and maybe that in this new code those provisions may be rationalized. So I mean, the business friendly, and there are again three more big challenges which the government is facing, but due to the political fallout they are not able to do: land reform, labor reform, and judicial reforms. These all are required. Everybody is aware of that. And this may give a boost of 1.5 to 2% in GDP if these reforms are carried on in the right direction for the development of the economy. But there is a political fallout. They have already seen that they had to go back on land reforms. They had to go back on partially on labor reforms and judicial reforms. Whenever they have attempted, they have not been successful. Supreme Court is not, courts are not taking it in that right sense, and that positively. Therefore, this issue is coming. Then Pawan said regarding the inclusive growth. Yes, very much. It is required. Government and focus of the government is for inclusive growth. And for that, rural demand has to be created. Non-agricultural income of the farmers has to be created. Every district must have industrial park where the local raw material, local labor, local technology, local skill can be utilized. And government is aware of that. They are doing it through various schemes. But the pace which is required in that direction, probably government may look into that, and they are certainly doing that. So far as the Make in India is there, they are doing tremendously. I mean, the kind of growth which they are trying to bring to R&D in nuclear small reactors, which Manoj discussed, in development of the AI-based systems, in development of chips, in solar energy, in non-fossil energy. The attempts, the efforts are in all direction. But in our country there are certain constraints due to which the pace may not be as much as we desire or it is expected, or because one more thing is there. When we talk that we are growing at the highest pace in the world, and then at what? Because China grew from 1990 for 30 years at double digit, 9, 10, 11%. That's why in 1990, India and China's GDP was almost equal, around $300 billion. Today, after the 35 years, we are at $4 trillion, and China is around $18-19 trillion. So they have gone so high, they have gone so fast regarding the development, and that's why now it is our turn. Now it is our chance, and we are doing. But if China could do 9, 10, 11%, we can also do. We have also the potential, but subject to the reasons which I discussed earlier, maybe that we are at around 6-7%. But there is all possibility that we will certainly improve in this. So in view of these economic developments, I think India is doing well, and there is always a scope for improvement, and we will certainly improve. Government is conscious of all the shortcomings or all the reasons which are lacking, and they were certainly taking these steps in that direction. The last point which I would like to discuss regarding the direct taxes, though there are not much changes which have been brought of any major nature in the direct tax, because new code is coming. However, there is a lot of discussion regarding the rate of taxes. This is a very good step to increase the limit up to 12 lakhs. One thing, it gives the money in the pocket of the consumers for spending, which will spur demand in the economy. And secondly, it will help in capital formation also. Because when you are having the return up to 7 lakhs, for non-salaried employees, non-salaried taxpayers, generally the benchmark remains what is the minimum limit up to which tax is to be paid. 7 lakhs, okay, they file the return 7.5 lakh, 8 lakh. But if now benchmark is 12 lakhs, they may file the return for 12.5 lakhs, 13 lakhs. So in that sense, if there is an increase in 4-5 lakhs of the income by non-salaried employees, that is a huge amount. There is a huge number of the taxpayers. It will bring the unaccounted income and unaccounted money into the formal economy. And the attempt of the government is throughout to strengthen the formal economy. Even for proprietorship firms, small business persons, rediwala, thelewala, they have declared a scheme that up to 5 lakh rupees you will get the credit card, provided you are registered with Udyam. Udyam is a portal with the Department of Industries where you have to get yourself registered. So by registration, you come in the formal part of the economy. So they want unorganized sector of the economy to be reduced and organized sector, formal sector to be increased, because the leverage, the multiplier by the formal economy, by the formal sector can be 4, 5, 6 times. That's why government is making attempt in that direction. So now old regime of tax has got no relevance at all, probably, because they have not increased the limits of tax exemption in old regime. Only new regime is being liberalized. Therefore, hardly there would be any employees, any taxpayers for whom old regime may be important. And that was the objective of the government, that everybody should shift to the new regime. And probably people will now shift to the new regime. So I think in the direct tax, there is not much to say, but whatever the scope was there, whatever the headroom was there with the finance minister, by increasing the slab rates, they have done a good job, which will give boost to the demand and in turn to the economic growth of the country. So with this, let me conclude my address. And if there are any questions, we will be pleased to discuss. Thank you, everybody.
Thank you, RK. Thank you very much. So there is a sea changes. A tax expert is talking about the economic development point of view, very lucidly and very seamlessly. So that shows. And the most important point in your discussion, which is very, very important point, which any normal eyes cannot see, which you have seen, capital formation up to 12 lakh rupees. That is absolutely right. In India, there are so many people, they don't pay tax, but when but they have a money, but they want to bring it in the system, but they are not coming out. But now you are absolutely right. Automatically, yardstick of these informal sector will automatically come into the main formal sector, and everybody will show 12 lakh rupees income because there's no tax. So by doing this, automatically capital formation and other thing will come. Okay, so Arun, what RK Agarwal ji has discussed, what is your take on this point, and you want to add something, because now budget has come, implementation is going on, it will, so we should, we have discussed that this will impact like this, but simultaneously we can also plan for the future agenda also in this way. So, for example, he has mentioned that public, private, and FDI, these are the three areas where investment comes, and that gives a multiple growth. No doubt, government is spending more than 50 lakh crore rupees spending they are doing, but we have to understand that out of this, they have to pay pension, they have to pay salary, they have to pay interest payment, which is a very huge amount, and they have to spend on his defense, which is a regular expenditure and one of the biggest. So the capital formation is always less as compared to the amount which we are spending. And that is also with so many problems. So what we should do some innovation, how we can bring out the private sector can create investment by some incentivization. They are giving but some new incentive which you think, and in FDI, what should be there? So first of all, on R.K. Agrawalji's view, your comment, Manoj, your comment, then I will come to some new ideas which we have discussed.
Yeah, I think my opinion is that yes, the private sector capex has to kick in. But mind you, the private sector capex will kick in only when they are comfortable with the demand. Even if you ease the finance, unless they see a continuity in regulatory mechanism, in reforms, and a demand environment, then if they don't see a continuity in that, they will not put up capacity. This boost, I said consumption boost in consumption is a step forward in addressing that issue. It will generate demand. And once the demand is foreseeable in the near future, the private sector will come forward and start investing. We talk of defense. You know, if you see how many companies in the last 5-7 years have come for defense, umpteen, L&T, I'm not taking the names of the smaller ones. L&T, Bharat Forge are much ahead of others. Bharat Electronics, what wonderful job they have done. So whatever sector where the demand is there, companies will come forward. And right now, the whole structure, if we see, is becoming more efficient by making, if you see the cement sector, at least the sector is getting consolidated. All small players are being taken out of the system through mergers and takeovers. So what will this lead to? This will lead to a much more efficient corporate, or much more efficient, cost-efficient sectors, industrial sectors in India. And that will actually increase the competitiveness of India in the global markets. And it is across sectors. And once you see the competitiveness, there is a domestic demand that has been spurred, that has been boosted by this income tax reforms. Then there is a stress on exports. There's a lot of focus on exports. There's a lot of focus on MSMEs to supply, to be vendors to these big corporates. What will it lead to? It will lead to an environment where big corporates can have the confidence that I have the supply of the vendors, the government's reform measures are continuous, I have the visibility, the domestic demand is there. Now I would also take steps to exports, and then they will start putting up the capacity. This is how it's a step-by-step process. It never happens that they take decisions in haste. And hence, I repeat and reiterate, I think Agarwal Sahab said it rightly, that this private sector capex, I know it has been waited for too long, but we are just on the corner. As I said, we are just at the inflection point where we see a lot of things happening. I give you an example here. A cement capacity, a small one in Hyderabad, which had 2 million ton cap, 2 million rated capacity, was being run at 45% capacity utilization. That inefficient capacity has been taken over by a big cement player. Now the capacity of that cement plant will increase to 75-80%. So you say the capex has not happened fresh, but it has gone into an inefficient plant to make it an efficient plant. So these small things are actually happening across steel, which across cement, even real estate. We all forget the RERA. All these small developers, their projects, at least in Mumbai, I am speaking about, have been taken over by new builders. So the new builders may not have bought fresh lands, but what they have done is whatever was the damaged part of the economic structure, whatever was the where there was inefficiency, they have been taken over by biggies and developed into, so that the whole economic structure is ready to go forward.
Okay. That's Manoj, you want to say anything about what RK?
I think yes, everyone is saying, sir is very much right that private investment would start when there is a confidence in the economy, when then there is a continuity and in that policy direction, and which is coming, which is good for the economy, that for a longer run they are giving in every budget they are giving policy decisions and directions are in the right way. So I think the private investment would start. Obviously, there are certain bureaucratic issues, certain things which are beyond the control or may need reforms. Like they have brought the IBC law, which is very good, which is very important for reinvestment of the or unutilized assets to be monetized, to be used for the economic growth, which is happening very slow. The timelines are not getting matched. It is taking 4 or 5 years to complete the insolvency resolution, which was not expected. Similar things, they have taken various measures, various policy relating to like urban development, smart cities, which has not taken off. Even the current financial year, we can see that large portion of the capital expenditure or expenditure allocated for urban development is not implemented, not remain unutilized. So this kind of things are there, and which is because of the bureaucratic system or systemic flaws which need improvement, and that would provide confidence to the private sector to start investing. If the consumptions are not there, then obviously why money would be put by entrepreneurs in the system. So development of the export is very important. So export economy need to be boosted, and the direction given by the budget of last budget or this budget or even previous budgets are very good, and they are putting the direction very right. Implementation might have certain issues which need corrections, and I think if that is happening, then the growth would come certainly.
Okay. So, Arun, the immediate reaction on this 12 lakh rupees income exemption, it has taken place that FMCG stock, the auto stock has increased. Do you think because that correlation is right, or it will impact other sector also?
FMCG, I have a slightly different view, and I will tell you why. What does FMCG consist of? Let's say Britannia, Dabur, Hindustan Lever, Procter & Gamble, Marico. All these brands are saturated now in terms of volumes. Everybody uses Colgate. Everybody uses soap. So if you give me more money, I'm not going to apply more soap. Why their volumes have been weak is the question. Next question you would ask me. So I would answer that what has happened is the Blinkits of the world, the Zeptos of the world, what have they done? They have gone for private labels. So if you go to a, let's say, superstore, or if you go to a Blinkit, you type, let's say, washing utensil soap, liquid soap, you will get Vim, you will get Pril, and you will get 2 other brands which are private labels, unbranded, which are 30-40% cheaper than. And what is the normal thinking? I just have to wash utensils, even though I don't have to do it, my maid or somebody else has to do it. So myself go for a lower price product, and hence this volume of Vim and Pril gets suffered. This is what is happening to the FMCG and why in Hindustan Lever, Unilever has not been able to show a volume growth. This is my estimate of why the volumes, and this budget will not impact. Where the impact will come, let's say everybody gets 80,000 to lakh rupees of 25 to 30% of this will get saved. Rest 60% is for discretionary consumption. When I say discretionary, more travel. I have been on a couple of WhatsApp. I am not a big fan of WhatsApp. 60% of the people are going to Kumbh Mela. I have never seen this kind of. If every visit to Kumbh Mela involves train, involves airplane, so these things will get boosted. Food, restaurants, this kind of discretionary consumption will increase. So airlines, the government has already given a big boost to connecting small terminals and increasing the airport. So these kind of things will get more. Coming to the second part of auto, which you said, yes, auto should, two-wheelers, especially two-wheeler will actually now graduate to a four-wheeler, a Maruti kind of a product. So that kind of upgradation will happen. FMCG is something which I am not. People will start spending on discretionary items. They were going, let's say, PVR once a month or once in 2 months. Now they may go for once every month. So that kind of spending, travel, leisure, where people enjoy, and we have seen how our average age, we have a big chunk of the population in that 27 to 32, 34 age. They are the big consumers in the future, and this is what they consume: traveling, leisure, hotel, restaurant, movies. This is what will happen. This is my sense.
Okay. Now, RK is very interesting point which you have raised and we have seen. I'm coming to this part, which is connected to tax, but it is directly impacting the economic growth. Now, government has given 1 lakh crore rupees in the hands of public after this discount, this concession. Is it right that 1 lakh crore rupees will come in
Yes.
the hand? Okay. Now, RK, it is very important point that in India, tax payment people are giving, very few people are filing their return. Okay. Return means even they have a surplus income or they are not doing this. In that case, the service class is, it can be service classes because you have to get the salary, so there's a responsibility of company. But business class is always earning more money, but they are not coming into that tax bracket. Now, government is giving this 12 lakh rupees type of thing and further they reduce this. Is it not good? Because when Arun was talking, 1 rupee you are giving to multiple people and it has a 4 times it is routing. For example, if you are giving tax concession on the corporate business, it will impact few people. But if you are giving exemption to the masses, then they are going to spend money to somewhere. Then that person will also do something. So, and this is also one study that if you are giving to these people, those who are on small people, then their churning is more than the big thing. Do you agree with this? And this clause of reducing the exemption should continue every year. RK.
So far as this provision and increasing the slab rates, so that to the individual taxpayers, there is a tax saving to the tune of around 1 lakh crore. And it is across the board. It is not only in the middle income group, to the higher income group also. Everybody is going to get the benefit of this reduction in taxes. So that higher income group, even otherwise, is doing the consumption. By this tax reduction, they will increase the consumption. Probably that presumption is also not correct. So I think this provision will certainly create some extra demand, but the way it is being hyped, it is not. It is a fraction of the total consumption which is done in the country. So I don't think that this provision can give a very out of box some wonders or results. But nonetheless, there is going to be higher consumption or higher savings. Either way, it is beneficial to the economy. If savings are there, again, it is not necessary that the tax saving may result in consumption only. It may result in savings also. So both ways it is good for the economy. So whenever the taxes are cut, taxes are reduced, it gives benefit to the people. At the same time, the compliance is increased. As I said, that there is going to be higher capital formation. As I said, that for non-salary employees, their mindset is to file the return near to the exemption limit. Maybe if it is 7 lakhs, they will file the return of 8 lakhs. If it is 12 lakhs, they may file the return of 13 lakhs. So that way, there is going to be capital formation, money coming into the formal economy. And secondly, the taxes, maybe better compliance by the non-salary class employees. And another perception which we have made, that only 4% people in the country do pay the direct taxes, because we are still a country where more than 90% of the people are not having the income which is which may come within the ambit of the taxable limits. Now by increasing the limit up to 12 lakhs, that number is further reduced. It is going to be reduced. They may file the tax return, because tax return is to be filed if your income is more than 4 lakh. But taxes are to be paid if your income is more than 12 lakhs.
Okay. Arun,
So people may file the return, but out of those who file the return, 50% may not pay the taxes. So the individuals who are paying the taxes may be hardly 3-4 crore of the people in the country. In a country of 145 crores, it is only hardly 3% or less than 3% people
So, RK,
who are
what-
paying the taxes. So
what-
this is because we are in that bracket, in that where the level of incomes are not that much. The way economy will grow, if we will go to 35 trillion, because per capita GDP of our country is very less. It is, in all developed countries, it is around 30 times of ours. In China also, it is around 6 times of ours. So when we will reach to, that's why we are saying that we will reach to the developed nation. And developed nation means our per capita GDP would increase 10 times from here. If it happens, only then 20% or 25% of the people will come in the tax paying capacity. So it has to go with the development of the economy, with the development of the nation gradually.
Okay. Arun, my two questions to you. If we are giving more money to the multiple people in place of corporate people, corporate house, will it increase faster growth? Number one. Number two, how to increase the tax bracket, how to increase the more people should pay tax, or they can come into the formal economy, even if they are not paying tax, but they are filing return and all things is there. Then how to do this? Because in India, percentage penetration is very, very poor as compared to 1 crore 40 lakh people, and how much tax people are paying. This is also creating a disgruntlement amongst the taxpayer because other things. So what is your call on this? Anu, you have to unmute yourself, Arun.
I think two things, Pawanji. One is the cost of administration of tax. I think the government felt that the cost of administration of tax for these low taxpayers is not justified in comparison to the kind of amount of tax collected. That's one. Second, these money in the hands of individuals is going to have a much higher multiplier effect than similar kinds of money in the hands of a corporate.
Yes.
And we should not forget that the government is not foregoing taxes. The more consumption will lead actually to more indirect tax collections.
GST will come.
Yeah, so यहाँ से दिया, एक हाथ से दिया और एक हाथ से लिया. So government, and it also leads to a lot of employment. Again, I come back to, I have seen people using this money. The only thing is should be consumed in India. That's, I think, only my request, that if we have to see the kind of exponential numbers in growth what we are projecting, I think this money, 1 lakh crore, should be used in India in tourism, travel, and then see the kind of multiplier impact it will have. If it is taken to a country like, let's say, Singapore, you go and spend there, then we are not collecting indirect taxes. So it has to be, and this, they are, you see the government, they are moving in different directions. If you join them all, you will understand what they are trying to do. They have developed a lot of domestic destinations now. They have started Vande Bharat. They have made now spending on airports. Mumbai already has one. There two are being more developed. Delhi, then Noida one is being developed. So they are improving the connectivity and domestic tourism. And if this leg of the economy kicks in, then we are going to have a much higher growth rate than what we all are projecting. We all, our Indians, have started traveling a lot, if you see around. And most of them now are not talking of Phuket, Singapore. They are talking of maybe the Statue of Liberty, Statue of, in Baroda, sorry. And then in Ayodhya, temple, then Kumbh Mela, Varanasi. All this is consumption by the middle class people.
Okay. RK, can you give a few points that how to increase the tax base? Unmute yourself. RK, you have to unmute. RK?
I mean, the areas where there is tax evasion, government has to identify those areas, and how they can reach to those persons. TDS is a very good instrument by which the early collection of taxes is done, and tax evasion is also checked. Then they have put certain TCS provisions also. So the government is trying to do it. Generally, a very popular demand is made that from the agriculturist, from the farmers, taxes are not collected. Whether that can bring the expansion in the taxpayers. I think that perception is also not correct, because the input cost of farm, of agriculture, is higher than the output revenue which they do generate. Therefore, they need subsidized. They need to be subsidized, and which government is doing in many ways, instead of putting tax on their income. And it is not that the small farmers or the agricultural income is so profitable that direct tax can be targeted to be collected from them. But nonetheless, there are certain pockets where there is a tax evasion, and the attempts are continuously made by the government to check those points.
Sir, you are mute.
Manoj, do you have any view on this? How
Sir,
to
I think, yes, I think RK sir has earlier rightly said that unless we increase the income base of the people of in country, direct tax collection may not be penetrated to a larger level. I think that then the indirect tax is the only venue through which we can collect the taxes. So the only option is to grow fast, to increase the GDP growth rate, and then penetrate the growth to lower level, let's say tier 3 cities or even villages, etc. So they are focusing on like fishery, like leather tannery, etc., the cotton farming. The cash crops are there. So if that is happening and the income of the lower level people, poor people will increase, then they will certainly come in the bracket. Otherwise, the only option is to collect indirect tax and grow through that.
Okay. Arun, the MSME sector government is giving boost. Now, in the boost, SME exchange or IPO is one of the incentivization to create a capital or create a asset, or uh, you don't require for developing capital from banks, because MSME, they don't have various asset base, and they have a new type of business that is there. What you see and what government should do to promote this through this, because this is another tool in the hands of MSME, that if I want to grow, I can go to the capital market, and 1,000 companies are going, and 2,000 or 5,000 companies are in pipeline. So that is another boost which can take place. What is your call? As a stock market expert, what do you think that how to accelerate the growth through SME IPO so money can come to the MSME and all new people? And I will tell you why I am saying this. What is happening? These MSME, they are having a good business. Like recently, we came to know about one public issue, and there was a hype that they have only one scooter, I think, agency, and that company has come out issue. But we should realize that that is a business. All MSME, that is fulfilling the criteria of MSME, and he is bringing out any business where profitability can there. He can increase things. He can expand business. He can give employment. Okay, so we should not govern by this. So I'm not going for the negative part that is everywhere. You just tell that MSME and SME exchange, how it can accelerate growth for developing India.
Okay, my sense is slightly different, Pawanji. But what I would say, to accelerate India's growth, we need MSMEs. There is no doubt about it. And the government is bent upon creating an ecosystem to make sure that these MSMEs are a significant contributor to the growth, and they facilitate the manufacturing. And the government has already extended the credit guarantee scheme for MSME. They have increased the limit from 10 to 20 crores for startups. They have created a fund of funds for startups with a 10,000 crore of corpus. So they have been doing everything. They have been giving more money to SIDBI to lend to these MSMEs. In terms of the capital market linkage, I believe that, you mentioned that two-wheeler company, or I think if you remember, Pawanji, when we started our careers, there was an exchange OTC.
Yeah.
And lot of companies, small, would come there, but they did not survive. I think my apprehension is that similar sort of things is happening in MSME. It's a 20-80 rule. 20 companies, 20% of the, or maybe 30% of the companies are fantastic. They deserve capital market. But the rest, 60-70% of the MSME listings carry a risk which a small investor is not capable of taking it. And hence, the probability of him burning his capital are much, much higher. So my sense is the regulator, the government should have certain very rigid criteria, strict criteria for any MSMEs in terms of turnover, in terms of profitability, in terms of due diligence, for them to hit the capital markets. Because trust me, if the retail investor gets his hands burned through these SMEs, then the time they will take to return back to the capital markets will be much longer, and the investments in mutual fund, which are an indirect route to investing in corporates or investing in equity markets, will die down.
Okay, Arun, Manoj.
I think yes. View is quite important, and this view is quite important. The big size investors, the portfolio managers, what they think about MSME is very important. But yes, the capital market, irrespective of the thought, the SME market would continue to grow. And the government is also positive, not so negative about the SME board listed companies. some have proven that they are growing. They are very much they are growing very fast post getting the capital through the capital market. So in all the manners, whatever way it may be, maybe in the form of loan through SIDBI or as per the government policies, or through capital market, if the money is going in the hands of the MSME and they are genuine people, they want to grow, then certainly they will add a lot of employment generation, create a lot of employment generation, contribute in the export market, contribute in the production. Most of the SMEs are basically manufacturing setup. So India need manufacturing growth. India need service sector is growing through the export of services, but export of goods is very important. Export of finished good is very important, and for that, MSME sector, as budget is saying, around 45% of the export of goods is happening through MSME. So their contribution to the economy is very, very important. And India is a very large employment generator. These are the very large employment generators. So we have to focus on it.
Okay. RK.
Yes, Pawan, let me just add to this point.
Yeah.
First of all, I fully endorse what Arunji has said. Because for MSME capital market to penetrate, two things are required. One is that the mindset, how to utilize the funds for which capital market is being, invoked. Capital market funds are being taken. And secondly, the mindset, how to serve the investors. These two things are required. Only then the capital market can be successfully and in a long term can be used for the purpose of development of the MSMEs. Otherwise, if, as Arunji said, that if you don't serve the investors and you don't utilize the funds in proper manner, then very soon the faith of the investors will lie down, and hardly any growth in that direction of the capital market for MSME sector may happen. So therefore, presently we have seen a number of MSME IPOs that the mindset is just to take the funds, and the intermediaries do think of their vested interests. Therefore, the mindset, how capital market is a double-edged sword. It is not that you can raise the cost-free funds from the capital market. The cost of the capital market funds is higher than the cost of the borrowed funds, if it is served in true sense, in proper with the true spirit. So therefore, this is one thing which is important for the success of the MSME IPOs. And secondly, when we are talking of the spur in demand or creation of demand, which is the crux of rotating or to speed up of the economy, there are 3-4 industries which are very important, which may give boost to a lot of employment generation, because we have to think of the employment intensive industries. As Arunji has said, MSME and tourism, these are two very big sectors. And other two big sectors I can say are textile and infra industry, particularly highways. If the focus remains in development of these sectors, then there may be higher employment generation, which can give a boost to the demand.
Okay. Very nicely presented. And now my last point, then we'll take up questions. RK, the government is spending only on 11 lakh crore for infrastructure. Now, majority amount is going for interest. And in India, we have a informal economy where lots of money are there. So government should come out some scheme for interest payment or return of the money to whom they have taken this loan. So if government can take this money and some scheme they can come out to reduce the burden of Indian tax on the economy, do you think something this type of thing should come? Because Supreme Court has restricted, but for some specific thing, for some specific purpose, if informal economy is coming in this by directly or indirectly and to pay off the loan of the government and by this money, and then you return this money to Indian people? Will it be workable somewhere?
Pawan, this is a big debate. I agree with you that we should make attempt that how the unorganized economy, how the cash economy, which is prevailing in the country, is brought back to the regular system, so that it can be productive asset, and in long term it would be beneficial to both, to the individuals as well as to the nation.
Yeah.
But there are a lot of challenges in it. Government has been making a lot of attempts in different ways how to do it, and in that direction I said that reduction in taxes is a very important thing. How to bring the informal economy in the formal economy, because people, one is trust to be created, and secondly the rate of taxes to be reduced. Now you see the rate of taxes which used to be so high earlier, these have been brought to a quite reasonable level. Corporate tax, you see, there is a scheme of 15%, which was there for the new industries. Then 22% plus surcharge. That is also very reasonable tax, and which is the international practice, which is all over the country. There is hardly any room left in that. But so far as the individual taxes are concerned, those have also been reduced, and there is further scope of reduction of taxes, not only in direct taxes, in the indirect taxes also. And this reduction in taxes may bring more taxes to the government and better purchasing power in the hands of the people, and expansion of the organized or formal economy of the country. So government has been doing it gradually. It may not be doing it in one go, and that attempt is going on. But direct scheme of making the declaration of the cash amount available with the persons, it has not got too much success, for one of the reasons maybe that this money which is available, it is not too much in the hands of the industry or in the hand of a businessman, because they do by one or the other way bring it back into the system, in the productive system, in the business itself. But the money which remains with those persons, maybe bureaucrats or politicians, or those persons who are not doing the any productive activity, that money becomes the dead money, or people, due to fear, keep the money out of the India, which the capital which flies from the country. Those areas have to be checked, have to be looked into. So therefore, government has been doing a lot of things for that. And the reduction in capital gains tax would be a game changer for that purpose, I feel, in long term. Then the check in corruption, because the money in the hands of the bureaucrats or politicians or other persons or businessmen, of course, is created due to corruption. And government, the more you create technology based systems where there is less discretionary powers to the executives, then certainly the corruption will get reduced. We are seeing in so many areas, even in income tax, when faceless scheme has come, the corruption which was there all around in so many things, it has come down. So it will come down gradually. Technology based systems, wherever all procurements in the government departments, if these are going through portals, through technology, the corruption is coming down. So therefore, to check the black money, you have to check the discretionary powers of the executives. It should be system based. And the countries where the corruption is not, it is not that their people are honest, their mindset is they are good people. People are the same, they have the same mindset, unless you get the opportunity. Here we get the opportunity, those doors have to be closed, those doors have to be shut, then gradually the system will improve.
Okay. So that's why one person has suggested need more action against tax evader, widening tax base, increase tax collection to replace borrowing by the government. Okay. Now, few questions people have asked. So just give a short answer, because all these questions are having a big answer also we can discuss, but now time is short. So I'm just asking, What are the implication of increasing the investment limit, turnover limit, credit guarantee scheme? Arun.
I think a big boost to the MSMEs and manufacturing.
Okay. What are the implication of introducing credit card with 5 lakh limit for micro enterprise registered on the Udyan portal?
Yes, same thing, implication.
Okay, same.
Supply side.
This answer will say how doubling the credit guarantee scheme for startup shall benefit, because yeah.
Yeah, we are improving the supply side.
Okay. Now, how increasing tax collection at source of foreign remittance from 7 lakh to 10 lakh shall result in more money to spend? RK?
No, it is for the purpose of the ease of doing the transaction, ease of because it was not reasonable. Therefore, it has been done. So it has nothing to do with the collection of tax.
Okay. RBI reduced interest rate by 25 basis point. Reduced repo rate is less attractive for bond market as US investors see less attractive Indian bond. US investors withdraw from the market, which leads to further weakening the rupee. One side, US dollar is strong. Reduced interest is not attractive for bond market. Plus, weak rupee leads to further stock market crash. Arun.
I think two things. US market has been very strong, has been doing very well. If you get 4.5 to 5% in bond in the US, what is the need to invest here in India? That's the outlook. But the RBI had to decrease interest rate, had to soften the monetary policy to support the budget and spur demand. All the monetary and the fiscal policy have to move in together to create demand. Both cannot be isolated.
Okay.
It is necessary for domestic demand creation. Yes, it is important.
RK, you have raised some questions. So somebody has asked, really appreciate the concern on long-term growth of 5 trillion economy with GDP growth of 4.8 as compared to 8%. This shows budget failed to visualize the aspects and in long-term perspective, present budget is dampening. Your views?
No. I just said that if we have set a target, because this is simple calculation, if we have set a target of 2047 to become the developed nation, for which we need the economy size of 35 to 40 trillion, then if we make the backward calculation, we have to grow the real growth of more than 8%. And for that, certain more steps are required to be taken. Otherwise, it may not be 47, then maybe 50, 52. That's the only difference. Otherwise, the direction is right and we will keep on moving.
Okay. How about the introduction of expenditure tax instead of income tax?
That is already there. GST is expenditure tax. So why this?
Actually, worldwide international practice, if we see, it is direct tax and indirect tax, because there is a set principle of taxation with the direct tax impacts the higher income group, indirect taxes impacts the masses as such. But expenditure tax is altogether a different phenomena. Expenditure, the limit of expenditure can be used as a catalyst to look into tax evasion, but which government is doing in so many policy decisions earlier taken. But altogether to shift from income tax to expenditure tax is, I think, not a internationally or widely accepted practice and a proven tax system.
Okay. Are withdrawal from National Saving Scheme 87 now exempt from TDS and tax? Are somebody asking, are withdrawal from National Saving Scheme 87 now exempt from
Yes, National Saving Scheme, where the money was lying earlier, now the withdrawal has been made tax-free in this budget. Yes.
Okay. So I think, friends, we have discussed so many things, and in a different way, we have organized this program on budget. Before closing this session, I will take the last closing comment from Manoj, Arun, and then RK. Manoj, your comments.
I think, sir, budget is in very right direction. It gives continuity. It gives basic support to all the sectors or part of the economy which requires support of the government. Now it is the private virtuous cycle to develop. To demand cycle need to be increased, and obviously manufacturing need to be boosted. So in the private side sector, private investors need to get confidence that the government is making the policy continuity, and that is for longer run. Hence, they should invest, they should have confidence in the government. And if that happens, then India will grow faster.
Okay, Arun.
So 8 or 9 out of 10, this budget will be remembered as one of those structural reforms in the history. That's it, sir.
RK.
I think the pace and the direction in which government is moving, it is excellent. After Modi government coming to power in 2014, there is a stability in the policies, and we are moving in the right direction. With little bit of push in the areas where there is a need, we can grow. Faster, and we can achieve our target of being the developed nation.
Okay, okay. So thank you very much. And RK, I think Arun, RK, Manoj, the budget we discuss always on we react on the budget, but we should be proactive on the budget. So what I'm planning to do, we are doing webinars of various webinars. Now, I think in the month of December, we will all organize a full day program on what should be the budget and on different topic on the capital market from tax point of view. And we will make the suggestion and submit to the government that these are the ideas which can bring out. Because after budget, you give suggestion, it will not. So I am just visualizing that we will have a one day whole program on divided into different part, agriculture, investment, and we'll call the best people from the industry who can best economic, best practitioner, best industry people who can give suggestion and compile it and give it to them. That will be the plan. Or capital market also we can ask, and we should not ask moon. We should ask the reality also. Sometime when we give a proposal, we ask, okay, reduce capital gain tax, do this zero. So that is not practically possible. So we will do. So thank you very much. Thank you, Arun. Thank you, Manoj.
You organize a mock parliament. Once we did this program of mock parliament in Bharati Vitt Salahkar Samiti, it was very successful. So we will organize a mock parliament.
Okay, we will do. So friends, thank you very much for participating. And next webinar, if in Parliament the direct tax code is out, then I will request RK Agarwal ji, Rakesh Gupta, Girish Ahuja ji, and prominent direct tax expert in India. We will call them for the program and ask them their views on. We will divide the program in such a manner that each and every person can comment on various aspects and how it will impact to the corporate, the individual, and the economy on this. Till then, thank you.